Bollinger Bands don't show you where to buy or sell. They show you where the move already happened. Watch, price touches the lower band. Every amateur clicks buy, then price drops again, and millions of stops are hit. The problem with Bollinger Bands is the fact you're reading it forward. I'm going to show you how to read it backwards, the only way that works. Here's the one pattern that predicts every profitable setup I take, the squeeze. Look at this chart. Price chopping sideways with tiny candles, bands getting tighter and tighter. Most traders close this chart. Nothing's happening. Wrong. Potential energy is building. Tight bands aren't boredom, the market holding its breath before it explodes. But here's the trap. You see the squeeze. You think, I'll buy when it breaks out. Then a green candle rips through the band, and you enter. But 3 candles later, stopped out. I did this so many times before I learned the difference. Watch. Here's the breakout candle. Volume spikes, and bands blast open. Now watch what happens next. Price pulls back, comes right back down, and kisses the exact level it broke from. And that kiss, that's your entry, not the breakout. The pullback after the breakout. We let the amateurs take the heat on the breakout. We wait for the pullback to shake them out. Then the real move begins. I call this the slingshot. The tighter the squeeze, the bigger the snap. Okay, you can now spot a coiled market before it moves. But there's a problem. What happens when the move goes too far? When everyone is greedy and you know a crash is coming? That brings us to the second setup. This setup saved me so many times in the past. Look at this drop. Many red candles, price outside the lower band. But look closer. See this candle? The body is completely outside the band. Not a wick, the whole close. This is pure exhaustion. Sellers threw everything they had. However, and listen closely, you never buy just because price is outside the band. Oversold does not mean buy. Here's what every single one was missing. Before I take this trade, I look left. Is there support from the past? Did price respect this area before? Right there. Price bounced from this exact zone. Now I have 2 signals. Price exhaustion and historical support. Both saying the same thing. But I still don't enter. I need the snap. Watch this next candle. It closes back inside the bands. Outside the band at support. Then first close back inside. That's the entry. I call this the rubber band. Price stretched too far, and now it snaps back. With this setup, you can spot reversals before they happen. That puts you ahead of 80% of retail traders. But here's where most people get destroyed. They keep hunting reversals in the middle of a trend. That's why you need strategy number 3. This is the easiest money in trading, if you use it right. Look at this chart. Bands angled up, price above the middle line, and price makes higher highs. Watch what happens when price pulls back. It touches the lower band and bounces, goes higher, then pulls back, touches the band, and bounces again, walking upstairs. Here's what clicked for me. In a trend, the lower band isn't a reversal zone, it's a trampoline. The market handing you dip buys on a silver platter. But there's a filter that took this from a 30% win rate to over 50%. That middle line is a 20-period moving average. Before any dip buy, I check it. If it's angled up and price above it, I'm buying dips at the lower band all day. If it's flat and price chopping through it, then no trade. No trend means no trampoline. The middle line tells you everything. It's the difference between trading with the current and swimming against it. You flip it for downtrends. Upper band becomes your ceiling. So you sell every bounce. You follow the staircase down. Okay, you have 3 setups now. slingshot for breakouts, rubber band for reversals, staircase for trends. But there's one filter that separates decent trades from great ones. Nothing to do with Bollinger Bands. This filter doubled my win rate. Look at this reversal setup. Price outside the lower band at support. Perfect rubber band. Now look at relative strength index. See this? Price made a lower low, but RSI made a higher low. Price screaming, sell everything, but RSI is whispering, sellers are exhausted. That disagreement is divergence, the best lie detector I've ever used. Here's how this saved me. So gold breaks down, crashes through support, looks like a clear short signal. Every indicator says, get out, volume spiking down, moving averages crossed. But RSI makes a higher low, while price makes a lower low. I took the long trade at the lower Bollinger Band, and 2 days later, 200 pips higher. Here's the rule. Divergence alone is not enough. A band extreme alone, not enough. Both together, that's an A+ setup. Now watch the upside. Price makes a higher high. Looks bullish. Everyone piling in. But RSI makes a lower high. Buyers are exhausted. Price is at the upper Bollinger Band. I'm already looking for the short. Divergence shows you when the crowd is wrong, when everyone's buying the top and selling the bottom. That is where the liquidity is. A band extreme plus divergence equals high conviction. Now, even these A+ setups fail without one final filter. This is the safety valve that protects your account when you are wrong. Before I click anything, I check 3 things. My traffic light system. Light 1, the location. Am I at a real level or a random one? If price respected this zone before, that's a green light. If it's just empty space on the chart, it's a red light. I don't touch it. Light 2, the trend. Am I fighting the current, like buying in a downtrend? If momentum is behind me, that's a green light. If the signal is fighting the flow, that's a red light. I let it pass. Light 3, the close. Is this candle finished, or am I jumping in while it's still forming? If candle closed and confirmed the setup, that's a green light. If it's still moving, it's red. I wait. Watch this setup. Location is at major resistance. Trend is down, and bands are angled down. Green light. But the close, well, candles still forming. That's a red light. And look, it closed bullish. Setup invalidated. I saved myself a loss by waiting a few minutes. Here is the non-negotiable rule. 3 green lights, or I walk away. I don't care if it's the perfect slingshot. I don't care if RSI is screaming divergence. 1 red light, and I'm out. The best trade is often the one you don't take. Here's the complete Bollinger Band system. Slingshot for breakouts, rubber band for reversals, staircase for trends, lie detector for divergences, and 3 green light system for confirmation. Now you know exactly where to look, but knowing the setup is half of it. You still need to know when to pull the trigger. The exact candle that says trade now. I break down the patterns I trust for entries in this video. That's your timing mechanism. Click it and I'll see you there. And if you're ready to fit this into a full A to Z trading system, that's what our academy is for. Link is in the description.